Good evening. This is the Elliott wave update for the NASDAQ 100 for Tuesday, June 14th, 2022. I have a few things that I'd like to unpack today, so I'm going to jump right in, beginning here with the NASDAQ. On the daily chart, I have no changes to make to that larger daily chart where we continue to count an intermediate C wave down. And within that intermediate C wave, we've completed minor waves 1 and 2. We're in a minor third wave decline, and it does continue to play out. Now, going down to that hourly chart, I can the way that I have it counted right now, it does appear that we may have finished minute wave 3, and I've labeled it as such. And so that would suggest that we're going to be in a minute fourth wave going back up, and that'll carry some pretty good potential of possibly getting back up to the 50, which is at 11,568, let's call it. So what I have been discussing as well is that the market continues, and you can see even at today, we broke above 1, 2, 3, 4, 5 times in total. We broke above the 20, but it couldn't hold, and it sank back down, broke it, sank back down, broke it, failed, broke it, failed, broke it, failed. So each time it does that, it is pretty wild that we continue to look at that 20 as being pretty solid resistance right now. Now, other things are kind of also happening, which are putting a lot of pressure on the market. And one of them is, again, that expiration that we have coming up on Friday. And while I had initially, when we began talking about it, talked about what direction the market is going to want to be wanting to see, so that all of the positions that they're looking at they'll get out without any real trouble. Now, when the market kind of moves quickly, high and low, it produces a lot of shifting around, and stocks like Apple and Amazon and Google and Meta and all of them, they slide up and down through strike prices. That puts a lot of pressure on an expiration week, one of this size, on the individual traders, because their positions go with what we call a gamma explosion. Now, oftentimes people are looking at a gamma explosion to happen to the upside when a market moves very quickly to an upside. But guess what? It also happens to the downside. And if you remember, when I started talking about this $3.6 trillion settlement expiration coming up on Friday, the directional changes were still kind of up in the air. We were looking at the possibility that maybe this would have been a B wave triangle, and that would have forced a C wave up. Well, that would have put the pressure on the upside, but it didn't. It failed, and it turned into not a B wave, but it turned into the wave 2 there, and it's the third wave down. And look what happened. That has presented all traders, most if not all traders, with a gamma explosion, because if they're short, they are getting, if they're long, they are getting shorter, and they're getting shorter, and they're getting shorter as it slides through the strike prices. So what happens is that we have to have massive adjustments across the board, and we're continuing to see that. So the effect is here, and it's beginning. Now, I want to just kind of show you that what we're seeing in the S&P future, by the way, which I thought was a very interesting thing to watch. Here we have in the S&P, that's the June contract, 1.29 million shares, futures traded today. Here we have September. Now, you would think if that was a roll, that it would have been equal amount, right? It's double. It's double that amount. 2.6, almost 2.7 million contracts traded in September. So it appears that they're trying desperately to roll a lot of things out to September. Now, whether that's going to be successful, whether it's all going to work, I do not know, but I found it to be very interesting today. And it also produced a lot of little flips and flies within the futures market. NASDAQ had the same, but NASDAQ was just more in line with what you would expect on a pretty steady roll. And so there wasn't like there was millions of contracts. Enough, but not as like we just saw in the S&P. So again, I'm going to say that a lot of those S&P stocks were just seeing a lot of movement, and there's a lot of shifting going on. Second thing that I want to bring to people's attention about rising interest rates, and now we're all going to kind of get worried about tomorrow. What's the Fed going to do? Are they going to do what they said? They'd only do a half a point. Is it going to be 3/4 of a point? Is it going to be more? And that's where the talk is. Well, I want to show you something, or I want to tell you something actually, on what actually is happening behind the scenes that we're not really hearing about. And I know we've talked about T-bills, and we've talked about the 5-year notes, the 2-year notes, the 1-year note, and et cetera. Now, T-bills are the real short-term paper, and they go from, I believe, 30 days out to 52 weeks. So 4 weeks to 52 weeks. And they just finished an auction on the 52-week Treasury bill auction. And the results were stunning to me. The 52-week Treasury bill will be paying 3.134% interest. So when this became news, if we noticed yesterday that the bonds suddenly were down 3, the long bond, the 30-year bond, down 3. It recovered, but they were down 3. They tried to push them up today. And then we get more news and they slide again. This is what's affecting the bond market. When we're starting to see that on our very short-term paper is where these interest rates are getting boosted and boosted and boosted. So you got the 2-year note, the 5-year note, the 10-year note. They're also beginning to really rise pretty quickly. So it also spells trouble. So when I see any upward movement in the market, I'm like, wow, people aren't necessarily really paying attention. That if we did, no one would want to be buying stock right now unless you're buying 20, a ton of puts, let's say. So this continues to go behind the scenes as we're all just focused on, oh, well, if I'm looking for upside, I got to have upside, it's going to go up. And for whatever reason, people want to dream that it's going to go up. That might be such a short-term play that you'll never get your money. I don't know, but I'm just really wanting to lay this out to make a point of don't be in love with upside. Don't be in love with downside, because we're going to see some very serious moves tomorrow. And I believe it's going to really come from, there will be an initial throw of pushing the indexes lower. I think whatever that number is, they're just going to sell. And they're going to sell that number. And then at the same time, I want you to pay attention. And pay attention what to do to volatility. Volatility crept up today, but the VX, which is the future, not as much. Now, vol outside of that was down 133. They didn't push that down all that far. And then they start to bring it back up. This volatility slipped 133 because there is all of this buildup in that once the announcement is made for interest rates, they will really sit on volatility. The volatility will get crushed. Now, this is a function within options, but it's also a function with how fast or slow we move in terms of the future. But it has an effect on options prices, what happens to your gamma, all of the above. So that's really where the focus of what's happening in the market is being played out. It isn't necessarily being played out here in the future. We just get to watch a price go up 10, down 10, up 15, down 15, et cetera, et cetera. But if we're looking at the options prices, or if you're an options trader, you're a lot busier than I think you probably want to be. Now, having said all of that, what can we see going on here in the market? So again, it looks and appears to me that on an Elliott basis, we may have completed that minute wave 3. Again, we're still in the upper, larger, minor third wave. So, and within this minor third wave, we're going to have 5 waves of minute degree. So we got 1, 2, 3. Now we can get a 4. I would not be surprised to see it come back up and retest, if not break above 11,539, which was the high in the Globex session. Now, what we have right above that, 11,567 in the 50. Now, let's just throw up not just throw up, let's just put up a quick peek at what wave 4 could look like. Wave 3 was huge. The normal retracement for Fibonacci retracement for a 4th wave would be 0.382. That's 11,853. That I honestly do not see. I do not see that. Can it happen? Yes, but I don't necessarily see it. That would be such a relief rally that we've not seen in a long, long time. Doesn't mean it can't happen. It truly does not mean it can't happen. And because to go up from here, it's 500 points. We have seen 500-point rallies in the NASDAQ, and it would happen so fast that it would make our head spin. So that's on the outside. On an Elliott basis, the 4th wave of this degree would normally find its endpoint at the endpoint of the 4th wave of 1 lesser degree. Well, that's right here. So I think this is a more realistic type of a move. Now, again, if that happens before the number or the interest rate, when the Fed gives their report, we may see a very quick slam dunk and then another rise. So if it runs up, they slam dunk it. That could be minute 4, minute 5, the completion point of minute 3, and then that larger, slightly more sustainable, not the bigger, but slightly more sustainable and larger minor 4th wave. So within this larger decline that we're still involved in, going back out to that daily, we still have, if we're only finishing minor 3, and minor 3, this is huge. Minor 3 only coming down here and rallying, it's not going to work for me. So I want to just share with you what the other possibility. Now, again, on the hourly chart, this looks gigantic, and actually, it's not so bad. It's over 1,000 points. But what if this gets backed up? And these are sub-minutes, and what I'm going to really be getting into down here is minute wave 1 of minor wave 3. I don't know. I'm just putting it out there on the table as a possibility, as I'm not even going to give it any probable ranges. But I think I would be wrong not to include it, because if this is all going to be finishing up pretty quick and we don't get down to here, then this minor 1 is just going to be too big. Minor 3 would be equal to minor 1 at 92.04. Now, it could cause a couple of things, so don't get me wrong either. I may have to go back and take a second look. It's like, what was all of this? What is going on? And if I need to make adjustments, I will. But here's what I can tell you just from this hourly chart, that we would likely still have additional downside. So if this is just going to be completing minute 3, a minute 5, and then we get a minute 4, then we get a minute 5, it should subdivide. So it still could be a very nasty decline coming off in the form of that fifth wave. And then, so I don't doubt that we can't get below 11,000, that we break below 10,000. Those still remain very strong and in the picture. Now, it is not uncommon, again, for a market to crash when it's extremely oversold. We're not that extremely oversold on the hourly or the daily, but we start moving back in. We're getting there on the daily, and we're getting there again on the weekly, but the weekly still shows, yeah, this is where we are. We should be getting down there. And so I can't rule anything out. Again, there is just so much happening, and it could all just come and create what we would call the perfect storm. And then that happens. So we got this interest rates. We've got the interest rates now finally showing up, and they're moving up substantially. Again, just a note on the interest rates. I don't know how many of you kind of go to a federal credit union or any type of a credit union, because you usually can get a better rate on the CDs, on a one-year CD. Many of them, some of even the better ones, are still offering 1 3/4% on a one-year CD. The 52-week Treasury bill just auctioned off and is getting 3.134%. Not quite double, but it's close. So how much time is going to be required for people catch on to this and go like, okay, Penn Fed, teachers credit reports, firemen, all the different credit unions across our states, across the country that are paying that rate. Either they're going to have to adjust their rate pretty dang quick, or everyone's going to be pulling their money and giving it to the government, giving it to the Treasury of the United States, because they're paying more. The Treasury needs the money right now. And so they know they have to pay a higher rate. They've got to get the dollars back. And here we sit. So this is a complicated situation. This is a situation that is not going away. It is not suddenly just going to be like, oh, inflation's fine, we'll be good in 2 months. No, this is filtering through the system. It is truly turning into a more serious nightmare than I think most people are capable of seeing. But if you really take a look, the story's going to be clear. And we've got so many other things in play. We got the volatility players out there, and they're going to be in play. We have option traders that they're going to be in play because they're going to get a gamma squeeze. It's already happening. So these things have an effect. So to hang on to something that's going to tell you, well, I think we've got to go up and we're going to go here, I believe is a mistake. Be more fluid. Be more willing to make adjustments, to accept what a move is happening, to not worry about a top or a bottom. Trade what's actually happening today, and don't be married to either one. So what we have going on is serious, and it can be very damaging to a lot of positions. For tomorrow, if the count is correct and we go into a fourth wave, smaller fourth wave, I will be continuing to look for upside. And it can be a strong move. We're sitting at 11,361 is where we closed for right now. We reopen in 35 minutes. So going up 200, 300, easy. It should be easy for the NASDAQ. And then, but we have the Fed tomorrow. So again, most of today was kind of feeling like inside dayish. But we did have additional new lows. We did, and not new highs, but we had additional new lows. And we went down to 11,012.37, I believe the low was. Now, I am continuing to look for downside. I believe that the rallies will be substantial in terms of that the volatility is going to play big in them. And so we could move, the market could move 200, the market could move 300, and just boom, they just pick it up, they just take it and they go. But they also can drop, and it can drop real quick. Again, tomorrow, 11 a.m. Pacific, 2 p.m. Eastern, the Fed. So at least we'll know what their decision on the interest rates is. Then at 2:30 Eastern, 11:30 Pacific, we get the Mr. Powell coming out and giving his press conference. And quite often, it's that second move that will be more vicious than the first. So be aware. Have a great trading day tomorrow. Continue using moving averages. They truly do help. I'm looking at my hourly, and I tell you, when it was breaking above that hourly on the 20 today, I was like, it's not holding it. That keeps that 20 all the way coming down as a resistance. It's a resistance level. So I'm looking for a fourth wave, but my first guess is like, you got to get above that 20 and you got to clear it, stay above it, to even have a hope, a whim, or a prayer of getting up to the 50. Getting above the 50, that's even going to be more difficult because you're pushing on something that you better have a good reason, but it may not make any sense to us because maybe it has to do with the gamma explosion. Maybe it has to do with what position traders have to do with their options positions. And that's, they're getting too short. They got to buy it. They got to, take it in. So again, a lot of things to keep in mind, but if we stay focused on the future, everything will be filtered and the price will be reflective of everything that's going on. So therefore, our job, pay attention to the moving averages, to pay attention to inside support and resistance. We have support and resistance points all up and down within this box. We can use them, use your moving averages, and have a great trading day tomorrow. Our next update will be on Wednesday, the 15th.